Visa and MasterCard are two of the most recognized names in the financial services industry. Both companies are giants in the payment processing sector, facilitating millions of transactions every day around the globe. But how exactly do they make money? This comprehensive analysis will explore the various revenue streams and business models that underpin these financial powerhouses, providing an in-depth understanding of how they generate profits. Visa and MasterCard do not issue credit cards directly to consumers. Instead, they function as intermediaries between financial institutions that issue cards and merchants that accept card payments. Their primary role is to process transactions and provide the infrastructure and technology that enables secure and efficient electronic payments. The primary source of revenue for both Visa and MasterCard comes from transaction fees. Every time a consumer uses a Visa or MasterCard to make a purchase, a fee is charged to the merchant. This fee is typically a small percentage of the transaction amount, plus a fixed fee per transaction. There are several components to this fee. Interchange fees. These are fees paid by the merchant's bank to the cardholder's bank whenever a transaction is made. Visa and MasterCard set the interchange fee rates, which vary depending on the type of card used, the nature of the transaction, and the region. Assessment fees. Visa and MasterCard charge assessment fees to the acquiring banks based on the volume of transactions processed through their networks. These fees are typically a small percentage of the total transaction volume. Processing fees. Both companies charge processing fees to cover the cost of maintaining and operating their payment networks. These fees are usually charged to the acquiring banks and can vary depending on the services provided. Visa and MasterCard also generate revenue through annual fees and subscription services offered to financial institutions. These fees can include card issuance fees. Financial institutions pay fees to Visa and MasterCard for the right to issue branded cards to their customers. These fees can be structured as annual fees or based on the number of cards issued. Value-added services. Both companies offer a range of value-added services to financial institutions such as fraud detection, data analytics, loyalty programs, and consulting services. These services often come with subscription fees or usage-based charges. Cross-border transactions, where a cardholder makes a purchase in a different country, are particularly lucrative for Visa and MasterCard. These transactions involve additional complexities and risks, so both companies charge higher fees for processing them. These fees can include currency conversion fees. When a transaction involves different currencies, Visa and MasterCard charge a currency conversion fee to cover the cost of converting the transaction amount into the appropriate currency. Cross-border assessment fees. These are additional fees charged to the acquiring bank for processing international transactions. They help cover the increased costs and risks associated with cross-border payments. Visa and MasterCard provide various merchant services and solutions that generate additional revenue. These services help merchants manage and optimize their payment processes, improve security, and enhance customer experiences. Payment gateway services. Both companies offer payment gateway services that enable merchants to accept online and mobile payments securely. Merchants pay fees for using these gateways, which can be based on transaction volumes or monthly subscriptions. Point-of-sale systems. Visa and MasterCard provide POS systems and related software to merchants, helping them accept card payments in physical stores. Merchants may pay upfront fees for the hardware and ongoing fees for software and support services. Fraud prevention tools. To help merchants mitigate fraud risks, Visa and MasterCard offer advanced fraud prevention tools and services. These services often come with subscription fees or transaction-based charges. Visa and MasterCard have access to vast amounts of transaction data, which they can analyze to provide valuable insights to financial institutions, merchants, and other stakeholders. By leveraging this data, they offer various data analytics services, such as consumer behavior analysis. Financial institutions and merchants can gain insights into consumer spending patterns, preferences, and trends. Visa and MasterCard charge fees for access to these analytics platforms and reports. Risk management and fraud detection. Both companies use advanced analytics to identify potential fraud and security risks. Financial institutions and merchants pay for access to these risk management tools and services. Market research and benchmarking. Visa and MasterCard provide market research and benchmarking reports to help businesses make informed decisions. These reports are often sold on a subscription basis or as individual purchases. Another revenue stream for Visa and MasterCard comes from licensing their brands and technologies to third parties. These licenses can include co-branding agreements. Visa and MasterCard enter into co-branding agreements with various companies, allowing them to issue cards with both brands. In return, the companies pay licensing fees and royalties based on the number of cards issued and transaction volumes. Technology licensing. Both companies license their payment technologies and platforms to other financial service providers. These licensing agreements often involve upfront fees and ongoing royalties based on usage. Thanks for watching. If you enjoyed this video, don't forget to give it a thumbs up and hit that subscribe button so you never miss out on our latest content. We love hearing from you, so drop a comment below with your thoughts, questions, or suggestions for future videos. And be sure to share this video with your friends and family. Until next time, stay curious and keep exploring. Bye for now.